Great. How are you, Jake?
I'm doing well. Are you calling in from California today?
Yes, I am. Yes, I am.
Fantastic. How's the weather out there?
It's beautiful. It is beautiful. I was outside a few minutes ago and it was warm. It's not even cold. I thought it was Christmas time.
Yeah. Well, cool. Well, very good. We've got a bunch of people joining now. Let me just manage that over here. I want to introduce you to a couple different people. Hey, Chris, how are you, sir?
Hey, how's it going today?
Good. How are you doing?
Oh, did I lose you?
No, I can still hear you, Chris. I can still hear you, Chris.
Oh, I can hear you now. You're good. Yeah.
Very good. All right, we're just giving people a few minutes to jump on. Looks like we have Chris Hines, Ian Thompson, Harsh Patel, a few others. This will be good. You always got to give people a few minutes. Remind me, Chris, where are you calling in from today?
Southwest Florida.
Very nice. We got Chris Hines, Southwest Florida. Chris Sargent, where are you calling in from?
From Portsmouth, New Hampshire.
Very nice. We have Eddie. Eddie's usually calling in from London, but today's in California. Harsh, you're in Chicago, is that right?
Yep, that's correct.
And then Ian. Ian, are you in Utah today, or where are you at, Ian? Let's see, Ian, if you're talking, we don't hear you. Anyway, well, very good. We'll give a couple of people a few more minutes, and then I will go over, Chris, I'll go over your bio a little bit. We'll talk about you. We'll introduce you to the crowd and Chris, and we'll discuss the volcanic ash mineral strategy. Amir, how are you doing?
I'm good, thank you.
Yes.
Hi.
Thanks for joining us today. Where are you calling in from?
San Diego, California.
Perfect. Appreciate you.
Sure.
Let's see. Were you referred by somebody? I'm trying to remember. I think I've talked to you before, right, Amir?
Maybe, yes. I'm not quite sure how I know about you guys.
Sometimes that's what happens, right?
Yes.
Well, very good. We're glad that you could join us on the panel today. We'll get started here in about 2 minutes, just letting a few more people trickle in. We want to make sure that the panel is ready to go before we make introductions, formal introductions to our guest speaker, Chris Hines, today. Very good. And then, of course, Ian is calling in from Erda, Utah. I don't know where Erda is, but Ian is from Erda, or calling in from Erda today.
Yeah. If you can you hear me now?
We can, yes. Thank you, Ian.
Okay. Yeah, I'm just kind of in the middle of my workday, just sort of passively listening to see what I can learn here and there. But yeah, Erda is located in Tooele County. You know where that is, Jake?
Yes.
Yeah.
Yep, up in Tooele. That makes sense. Very good. Thank you, Ian. Appreciate it. Any questions you have, we'll have some subject matter experts here to discuss and to explain. That'll be great. Always appreciate it when Ian's with us. He has some very knowledgeable questions. Okay, well, I'm going to go ahead and get started. Today, again, like I mentioned, we have our guest, Chris Hines. We got a couple people in a LinkedIn group and a Facebook accounting group that are also watching, and will be able to type questions over to me while we have this presentation on the volcanic ash mineral strategy. This is a strategy that has been around for quite a while now. In recent years, its implementation has been implemented through a variety of different minerals, one of which has been magnesium for those who participated last year. And this year, an item that is being harvested out of Utah, volcanic ash. Chris, you are a CFP, you are an attorney, and you have vast tax strategy experience. You've, how would you say, during the last quarter century, been sought after as a speaker, not only for CE credit, but at various events and luncheons. I don't know if maybe, Chris, you can kind of talk to some of the events that you've given a.
Yeah, sure, Jake. Thank you. It's a sort of a long and rambling bio that I sent you, so that's not fair. That's my fault. So yeah, let me jump in. So I've been a lawyer for almost 30 years, specializing in tax and asset protection.
I happen to have the CFP, although I'm not a planner per se. I just love continuing education. I can't get enough of it, as you can probably empathize, Jake, when it comes to the CFP stuff. But anyway, so yeah, I'm working with Chris Sargent and his team over at Minerals Ventures as a technical advisor. And so I knew, or Chris Sargent knew, we were going to have some folks on the call who had sort of a tax background, financial planning background, such as yourself. And we wanted to be able to, as best we can anyway, sort of speak to some of the technical issues if they do come up. And then from a presentation standpoint, we can certainly take it any way you like. And Chris Sargent is sort of the expert on the program itself, being one of the co-founders. And so I think what, Jake, with your permission, what I'd like to do is maybe you can guide how you'd like the discussion to go, but I think Chris can probably give you more of the overview, background, how the program works, etc. And then as those technical issues come up, I'll chime in if need be, but certainly leave it up to you as to how you'd like to handle that.
Well, I appreciate that. Yeah, so very high level, we like to present a topic of discussion, and that's what we do every week here on this call. And we'll go maybe 15, 20 minutes into what it is, and kind of the history of it, after which we'll open up for some questions and answers, of which I already have a list, which is good, because as Chris and Chris, the two Chris's, are discussing and presenting, I'll kind of maybe interrupt or interject as it becomes relevant with some of those questions. We'll go kind of through those, and then allow certain people to actually physically jump in and chime in and ask a couple questions. And so Chris Sargent, if you wouldn't mind, maybe give us a little bit of the history and the background, being one of the founders of this particular implementation of the strategy. Help us know where it all originated.
Sure. Greetings, everyone. So just a quick to see where it really stemmed from. So my partner and I, we do a number of things in related arenas as well. So beyond the ordinary income strategies, we've been working in the capital gain space for many years, and we're known for as the guys doing the tax deferred installment sales, formerly known as the monetized installment sales, and did those quite successfully for many years, and still do them. But about 3 years ago, it occurred to us that for every person having an exiting a highly appreciated asset, either a middle market business or commercial real estate, there were probably 1,000 people who had high ordinary income concerns, high earners. And in response to that, we rolled out 3 years ago what we call a leveraged tax deduction. And using minerals, you touched upon that, the last 2 years was magnesium. This year is volcanic ash fertilizer. And really, in a nutshell, the way the strategy works is that we refer to it as a bulk acquisition opportunity. It allows for an individual to get a tax deduction equal to 4 times of their outlay, and that's done by partnering up with an owner of volcanic ash and then donating it to charity. So it's very simple in that the individual puts up the cash and the asset owner puts up 4 times based upon fair market value of that cash, and the LLC donates the asset to charity, and the individual gets the deduction. You can get the deduction because of the tacking period. The LLC has held the asset longer than a year. You get the tacking period, therefore you get the fair market value when you donate the volcanic ash. Now you have the option, of course, to keep the ash. You can take delivery if you like as well. But obviously, if you're looking for the tax deduction, the way to get there would be donated and get the fair market value deduction.
And I guess
it's really that simple.
I was just going to add, if they don't check that box, they might just get that volcanic ash delivered to their home, right?
Yeah, you can certainly get a whole truckload of volcanic ash if you like. It's a dump truckload. Donate delivery to your front door doorstep.
So if you're into gardening, that might not be a bad thing, but if you're here for the tax deduction, that won't accomplish your goal.
Correct.
Okay, no, that's wonderful. This has sometimes been compared to the arts and antiquities simply because of the date of the donation. There's an appraisal. Maybe one or both of you, Chris's, can explain how that is similar or different.
Sure, and Chris can take it further. Obviously, the issue here with antiquities or conservation easements is obviously valuation. of the asset itself. And I'm gonna let Chris speak to that because he's got the tax background. So
Yeah, sure. I mean, what we're trying to do is, compliant with the tax code. What we're trying to do is have an appraisal within 60 days of donation, if that's what you choose to do or your clients choose to do when you're donating the minerals, and that that appraisal is, it's fairly straightforward, right? Because there's a very active sort of market for these types of minerals, and there's recent sales, and that particular appraisal within 60 days of donation by a qualified appraiser is going to check all the boxes you would need to be able to substantiate the tax deduction should you donate the minerals.
Very good. Now, some people might say, hey, I'm looking for a 4 times, 5 times, 6 times, whatever multiple. Can you help us understand the importance of the appraisal and how there's really not any multiple? It just, kind of ends up being that we have a raw good that ends up being processed and refined. And of course, it's going to be worth more when it's donated. Maybe you can elaborate a little bit more on that.
Yeah, sure. I'll take that one, Chris. So, so really, we get this question frequently with clients who say, "Well, what if the value fluctuates and I write a check for $25,000 or $50,000 and presumably I'm going to purchase $200,000 fair market value worth of this volcanic ash, but what if the price fluctuates? How does that work?" So what we'll do is we'll basically coincide the amount of mineral that you're purchasing to be the fair market value based on the appraisal at the time of acquisition and donation, right? So as soon as that appraisal comes out, that constant number, that $50,000 that I use as a hypothetical number, could buy you a little more or a little less than what we perceive to be the price based on previous appraisals of the product.
Very good. So mechanically, let's just kind of run into this start to finish. A lot of people are wanting to be charitably oriented, and because of that desire, this strategy allows them to receive an additional benefit that is somewhat larger than just giving money to a charity. Essentially, and let's I don't know, Harsh, are you okay if we use you as the guinea pig real fast?
Yeah, that's fine.
So Harsh, start to finish, has recently donated in volcanic ash. The process was he learned about the strategy, he learned what he could do. He has significant income, so he needed to have, it would be beneficial for him should he receive an offset to that significant income for tax purposes. And because of the alliance with this charity and foundation in the country of Haiti, he's able to facilitate the means by which they can get this soil conditioner, this volcanic ash. He's able to participate in an LLC that, based on the tacking principle, has been around for longer than a year, in conjunction or coordination with the mining or collecting of this volcanic ash, of which is later refined and it is processed or whatever is required, so that prior to the donation, it receives an appraisal that ends up being, at that point in time, you could do a ratio. It could be 3 to 6 times more, whatever that number is. And that decreases Harsh's adjusted gross income up to a 30% of AGI threshold. Now, Harsh, is that kind of the process you went through to the point of transferring money?
Yeah.
After transferring money, then Harsh has to vote for that to be donated. And based on the appraisal, he'll get, maybe Chris Sargent, Chris Hines, you can talk about it during tax season. This is important for Elizabeth, who's here. What kind of tax documents will they get?
yes, so he'll get the K1 next year. He'll get his K. So, and just to back up, you're going to lie. As Chris mentioned, you're going to get the 4 times, regardless of the appraised value, because we'll just the partner will just adjust what's being donated to make sure it's a 4.
Okay.
So you will get the 4 times. Yeah.
No, I appreciate the clarification there. Yes.
Yeah. So that's locked in. So basically, you join the LLC, you wire the cash contribution, and and then year end you vote. You vote to receive either take delivery of the volcanic mineral or to donate it, and then next year you get the K1 reporting, and the LLC is unwound.
Very good. All right, so that helps because then that LLC, you don't need to be continually paying for registered agent on that LLC or anything like that past the date of the tax strategy. LLC can be unwound once the assets of the LLC are donated to the charity. And it's critical, again, that we check that box after the money is transferred so that we vote. We actually provide I don't know if you call it a corporate decision or a resolution to actually send the assets of the LLC onto the charity. Okay.
Yeah, this is when you first and Jake, you know this because you've got links that track all of this. So the client will be given a link that allows them to check. You'll end up check. Well, the link actually offers. We have two strategies, but I think in this case maybe we're only offering one strategy. We actually have two strategies. So as of right now, the links can offer the one or two strategies. You check off which strategy you like, and then when you do make a contribution, you're checking off if you actually in the original link you're checking off whether or not you want to donate the asset or take possession.
Okay. I do have a question coming in here, and if you don't mind, they're asking to explain the tacking principle. And we've mentioned it and we've jumped over it, and I think we even briefly explained it, but could we spend a little more time talking about the year holding period and the tacking, what's actually being tacked to?
First, you want to handle that or you want me to?
Yeah, you can jump in on it.
Okay. Yeah, so what the client's actually doing is they're contributing cash in exchange for interest in a series LLC that's taxed as a partnership. To that same series LLC, we have we'll call him a capital partner. That capital partner is contributing the amount of volcanic ash that we just talked about. So we covered it. I'm not going to repeat that, right? So we have two partners in one series LLC, two members in one series LLC, more specifically, and that series LLC is taxed as a partnership. The tax code says that when you partner in a partnership and you're contributing assets to the partnership, the partners in the partnership are able to tack on to the holding period of the partner who contributes I'm going to call it the capital item. In this case, it's volcanic ash. So if our partner who's contributing this item, this volcanic ash, to the partnership has a holding period of greater than 1 year, then the partners, when that asset is contributed to the partnership, the partners in the partnership all have that long-term holding period by virtue of what are called the tacking rules, where the other partners are able to tack on to the holding period of the partner who contributes the asset to the LLC that's taxed.
Well, I appreciate that, Chris. Now, is there a comparison to any other strategy where they've done tacking like this? That's kind of an open-ended question.
Yeah, I was going to say, Jake, it's a good question. So oftentimes you're probably thinking of or referring to the conservation easements, and there's been a lot of comparison between conservation easements, and I get this question a lot, so I'm not going to answer a question that hasn't been asked yet, but it sounds like you're kind of talking about it. But anyway, so what happened is in conservation easements, there is this is not a transaction that's substantially similar to conservation easements, and it's something that there are major differences, and I can go through those differences. But oftentimes, or in most of those structures that we've seen, there was a tacking of any property that was donated to the partnership, and none of those cases that I've read and that I've been involved with, that there was no sort of questioning of that tacking period.
Okay, very helpful to understand. And since we since we jumped into it as well, there was a question that I was responding to just by message, but let's go ahead and talk about it. They were asking, is this anything like a conservation easement? And I was explaining that no, it's not, and everything else. But would you maybe dive deeper into the nuts and bolts?
I'll give you. So if you look at the actual notice, because what we're looking for is, all right, it's not a conservation easement. We all know that, but is it substantially similar to a conservation easement? And if you look at the notice that the IRS published regarding conservation easements, the original notice, and I've read it multiple times. It's not that long. I would encourage everybody on the call just to pull that notice up. And the notice explicitly states that it only covers, notice meaning these transactions are transactions of interest. They are listed transactions and need to be disclosed on a tax return, right? So the reason why this is different, it's different for a lot of reasons, but one of the major reasons why it's different and it's not substantially similar to a conservation easement is that conservation easement notice only covers real property. Real property meaning land or improvements thereupon, right? So this is not real property. So it's just by definition cannot be substantially similar. There also are a lot of other differences. One of those differences would be, the fact that, and really where the IRS really got and always digs in on these types of audits on conservation easements is that they focus on the valuation, right? And they really take objection to what they call a speculative valuation. And valuation with conservation easements, as I'm sure a lot of you know, are based on highest and best use, right? So you purchase this piece of property through the partnership, you're going to donate the property, and you get appraisal based on this highest and best use. And a lot of those appraisals, the IRS just said, look, these are very speculative. There's, yeah, we know we can put, an Amazon distribution center here, but I mean, my gosh, there's nothing here now. This is all speculation. So the major difference, I think, but the two major differences are, number one, the appraisal that we have on volcanic ash or last year magnesium. Those types of appraisals are very straightforward and based on recent sales and based on the material, the substance that you actually have, the minerals that you actually have in your possession. So there's no speculation, I would say, involved. Now, could they, the IRS somehow introduce an appraiser that somehow says that, oh, well, no, this is a little higher than we, well, I suppose, but that's not going to be, in my opinion, based on the appraisals that I've seen, over the years with the program that Chris and Micah put together. Those appraisals are very, very detailed. They're intuitive and they're very simple because you're dealing with an asset that's sort of readily tradable, has been sold over and over again. So there's really not a lot of speculation or wiggle room when it comes to the actual going price, which will then translate into the amount that partnership into which you invest will come.
Yeah, basically what is commercially
if I would, Jake, I'm going to expand upon that too, but just to make a point. So Chris made some good points, and really to keep it simple, you have to look at it this way. The benefit to the taxpayer in our strategy here with the volcanic ash comes up front in the bulk acquisition. I didn't really talk about that enough, in that you're getting into you're contributing this LLC that bulk acquired this asset at basically institutional price. You're getting in there, you're donating at fair market value. There's your 4 times, right? As opposed to the conservation easement, where, quite frankly, the ones that are under attack are where there are these bogus inflated valuations. So that's coming on the back end. Our benefit's coming on the front end. We're not even open to that angle of attack, in that there is no inflated valuation. Like Chris said, whether it's magnesium, volcanic ash, these are commodities. So even a slight fluctuation in appraisal, they're going to trade close to where they will be, and there's no room for that type of inflated valuation. You can't say a pound of magnesium is worth 100 times what it's traded on the market for. You can't say that. And obviously, we've seen some very extreme examples of conservation easements where people have replaced these absurd, and in the art world as well. It happens with artwork as well, because who can determine what a piece of art is worth? Right? It's very, very hard to do. Yes. So that's a completely different aspect in terms of how the IRS even looks at this.
Well, just to add my little 2 bits, I feel like what is commercially reasonable based on what is always being sold for the same price, the same quantity, the same everything in bulk, I think that definitely goes towards helping. Whereas a lot of these abusive easements are syndicated based on items that don't have any value, any intrinsic value. So I believe that there's really good cause for that. I do have a question, and it's touching a little bit on stuff that we've already talked about, but there's this very nice CPA, and she's asking, is there any concern, because she herself is considering participating, is there any concern becoming a partner of an LLC or buying into a series LLC, like, and then just a few days later getting this big deduction, even though the LLC has been around for the period necessary for tacking? She's just asking, is there any concern? You know, maybe everybody else has been around forever, but me jumping in last minute, and again, she is a CPA and she's just wanting to know very kindly, is there any concern with her having ownership in the shares for a short period of time, even though the LLC has been around for longer?
Chris, why don't you go ahead and address that?
May I handle that? Yeah.
Yeah.
So, well, I mean, I suppose there's a lot I could talk about there, but I think the short answer is that, you know, as Chris mentioned, there's an ability to, if you'd like, there's an ability to hold the volcanic ash, right? Meaning, and by the way, some of the information that we have available goes into the use of the volcanic ash, and I'm not talking about the donation date that you went into at the beginning, which, you know, is certainly something that is important for people to understand, but the actual business use and business purpose and business plan of being able to invest into a series LLC and then make a decision that you'd like to donate, I don't think there's a technical sort of issue there. However, you know, you don't have to donate. Let's put it that way. And if you don't donate, there's actually a pretty strong argument to be made that you could, in buying in at such a discount, that you would have a very, very valuable asset that you could hold. And I'm not suggesting, I know we're on this call talking about the tax aspect of it, and I don't want to derail that, but there's certainly some argument to be made that, you know, especially with what's going on in the world today relative to food instability and some of the other things that we're all seeing, that, you know, this might not be a bad longer term or even sort of midterm type of hold, you know, such that you realize capital appreciation on that asset. Now, let's go back to the specific question though, and I'll answer that. There's no sort of issue with coming into a partnership and, you know, weighing your options and then deciding to donate some or all of the assets of the partnership as the, you know, the decision maker in that partnership.
Because in a way, nobody can control the timing of when people become partners, right? And we do have these calendar year, fiscal year, what have you, timing restraints that things happen in between. And as if the entity is around and it has activity and it has assets, etc., somebody entering in now can still receive the benefits of that based on the value that you mentioned, that they could do something else with that besides just donate. And there is business activity. Did I touch on some of the highlights of what you said there, Chris?
Yeah, I think that's a pretty good summary. Yes.
Okay, very good.
And I think also, just to expand on what Chris said, so again, we're talking about, you know, obviously the tax benefit this year, but for someone who, if they felt that they didn't want any nuance at all, and we don't really feel on our end that there's a whole lot of nuance regarding the tacking period, but just to talk about that a little bit longer, because again, we don't have to worry about inflated valuation like conservation work. That's off the table. So if you want to talk about the nuance would be in the tacking period, theoretically, if there were one. And so I think what Chris alluded to is beyond the economic value of that is if you took possession yourself, and as a way that maybe, well, I don't want to get too far down the road with that, but anyway, taking possession in some form, either on paper maybe, and then you held it for X number of time, then it wouldn't be a nuance only anymore, but you have the actual holding period yourself and then donate it. So if you bought it this year and donated it next year, you wouldn't have to worry at all about the nuance of the packing period if that was a concern. I'm not suggesting that should be a concern at all, because if that was, you could literally buy this year maybe and hold and then donate next year, and then it's really a slam dunk at that point. Would you agree, Chris?
Yeah, I would, and it's funny because I guess I zoom in so hard on the volcanic ash and all this information that I'm really kind of sold on the volcanic ash itself as like an actual commodity that you would consider, like you just said, maybe holding, work out a custody arrangement, etc. Just because I think that there's a tremendous sort of room for appreciation, and the timing is just spot on. But like I said, you can do what you like with it. You could donate it, you could hold it, you could maybe donate some and hold some. Those are things that you can decide, because this is a business into which you're buying, right? So you're trading cash for business interests. What you do with that is really up to you.
Now we've been diving deep into some of the weeds here on some topics that maybe not everybody understands, and that's okay. We've got these subject matter experts here with us today that have been helping out greatly answer some of these questions. We do have a case scenario, or I guess a what if question from Harsh. Harsh, appreciate that. Harsh is just curious. Hey, there's that 70% of AGI limitation, and let's just throw out an example. Let's say Harsh makes $1 million, $1 million, and he puts in 100,000. All right, so he's not able to benefit from all of it this year. He gets up to a 30%, which would be a $300,000 deduction this year, and then a carryover of 100. The question is this: is there any benefit to doing more, or should I just stay within those thresholds? And I'm gonna cover the pros and cons, and then Chris, if you can fill in some of the gaps if I don't explain it very well. But I would say that Harsh, we could do more, and that benefit rolls over, and that's perfectly fine. What would be a potential con of doing that? Why would you perhaps not want to? The simple fact of, well, there's probably going to be a similar strategy next year, and you could just do it then. And so you're giving up money now, planning on having an offset against income next year. And that's not necessarily bad, other than, should we plan on next year's taxes today by making that contribution, knowing and understanding that we're going to have that excess rollover up to 5 years going forward? Or should we just plan on making a contribution next year? Those are kind of the two decisions. Neither one of them is wrong necessarily, but Chris, what would you say to that?
Personally,
yeah, well, I mean, Chris, I'll let you take it from a, maybe a more technical standpoint. I can see maybe both sides. There's also the possibility, from my perspective, again, I'm not the tax guy. I'm more, I'm on the business side of things, entrepreneurial side of things. So there's always the possibility of we don't have any more next year. I mean, we're planning on it, but there's always that possibility as well. So that could be a benefit. I'll let Chris speak to the other things.
Well, just if I can throw in real fast,
ahead,
to your point, Chris Sargent, we did have an individual last year who was very passionate about the magnesium, who thought that maybe it wouldn't be around the following year, which it's not, right? And he did excess in magnesium because he felt very strongly about the Stroke Foundation, where the money was going to go, because he knew somebody very close that had suffered a heart attack and was on magnesium supplements at the time and different things like that, and felt like, hey, those people who can't afford the type of medical care that everybody else has, maybe this Stroke Foundation is doing a good thing. And so it was more incentive for him. It's like, yeah, I get the tax benefit, but that's not the primary purpose I'm doing this. I mean, it is a purpose, and it's strong, and I'll go ahead and bank some of that deduction for next year and do more, because I don't know that magnesium is going to be around. So to your point, Chris Sargent, that is a very real decision factor that some people consider.
Yeah, so just to try to add, because you guys summed it up well. I don't really think I'm not going to talk just for the sake of talking, but I think there's three choices if I had to boil it down. One is that we use, Harsh's example, right? So he makes $1 million. You're gonna buy call it $75,000, quick math of, of volcanic ash worth 300,000, and he's able to take that deduction in 1 year. Or he could buy a little more, maybe he buys 100,000, and that additional $100,000 deduction after he just donates all of it, that can be carried over to the following year, and he knows he's going to have some income in the following year, and as long as he has at least the $300,000 of income, I guess, right? Probably 325 or so. He's going to be able to use up all that deduction the following year, and if not, he can carry it forward for another 4 years after that. Or I guess door number 3 would be that buys a little more this year. Maybe Chris Sargent's right. Maybe it won't be around next year, just like the magnesium that wasn't around. And he ends up donating enough maybe to help the charity and offset his taxes in 2022, and then he actually holds on to the additional amount of the asset for another year just to see what happens. So he doesn't make the donation. Maybe he holds it for capital appreciation purposes. Maybe it's worth more next year on appraisal because he's got a constant amount, and maybe because of what's going on in the world, it goes up, and he actually gets a larger donation next year, or decides to continue to hold it. So those are sort of the 3 options that I see when it comes to managing the taxes, carry forwards, and looking at the capital appreciation properties of potential of the asset.
Harsh, was that helpful?
Yeah, that was helpful. I have one follow-up question regarding the vote. Do you need to vote before you find out what the outlay will be? Like, if I know you said it's 4x, but there's a potential it could be higher. So
No, it won't be higher. It'll be 4x.
Oh, it's 4. Okay, so
it's 4. It'll be 4.
Yeah.
And the timing of the vote is obviously after the money is transferred, and there's ownership in the LLC.
Mhm.
And then within so many days, whatever after, they'll send you a form that you actually have to check the box and vote to make that contribution, that donation.
Okay, thank you.
And somebody asked, hey, if I've donated 50 already and I want to donate more, will it all come in on the same tax documents, or will there be multiple LLCs?
It'll come in the same. They'll just add it to the original.
So that's just clerical on our side, so to speak, to line the incoming monies together, so to speak.
Correct.
Okay, very good. Well, wonderful. Now, Micah, are you getting any questions on your end that need to be asked at this time?
I'm not seeing anything on my end.
Okay, very good. That's nice to actually have a moment to breathe. I like it. Just super high level. Chris Sargent, remind us, being part of the founders of this particular use of this strategy and everything else. How long has this been around?
This is our 3rd year with the minerals.
3rd year with the implementation of the minerals, specifically like this. However, of
Yes.
course, tacking and this type of strategy, whether you compare it to arts and antiquities or to something else.
We didn't invent this. No, this
Right.
is not. We just this specific strategy is ours, and it's our program. But the concept itself is been around much longer than that. Obviously.
Right.
Maybe Chris would know how long. I don't know how long the concept's been around.
Yeah, that's a good
didn't-
question. I don't know.
Yeah.
I don't know off the top of my head.
But since
We certainly did. We didn't invent it. That's for sure. No.
since wealthy individuals that obviously had paintings and such that wanted a deduction from way back when, literally closing in on probably a century, people have been donating art to museums and to charities and receiving a deduction. And so, whether it's arts and antiquities, or whether it's something similar in donating items of value for the fair market deduction, whether it's a stock that you've owned, a stock in Apple, maybe it's been in, something that you inherited from your father and you have literally no basis in it, whatever, and now you're donating it to charity, you get the fair market value write-off. There's a pattern here of again and again and again, there being a fair market value, which could be upheld by an appraisal, or sometimes just by the market itself, if it's a stock in the market, that you're able to get that deduction based on the sales price. And so this I'm just kind of reiterating the common sense of what actually happens here. The strategy is that there's people involved in this activity today, and you're able to partner with them through these series LLCs and enter in and receive that K1 because of partnering with them and being a part of that activity that they've been performing on an ongoing basis. Any last thoughts? We're going to close out. Well, no. Let me open it up to individuals here. I've been receiving several messages. I think that we've answered and touched on everything that I've been receiving in the chat. However, anybody left here on the panel that would like to open the video, open the mic, and now that we have the subject matter experts with us today, now's the time to ask the questions. We appreciate Amir joining us from San Diego today, Ian from Utah. And with that, I'll go ahead and just, oh, Elizabeth, I see you opened your mic.
Yes, I did.
You're joining us from Atlanta, is that right?
Atlanta, Georgia, that's correct.
Very good, appreciate you. And please feel free. The time and the mic is yours, and let's see what answers we can get from Chris and Chris.
Yeah, I was just wondering, and this question may be elementary, but what actually goes into the appreciation value of, volcanic ash? Because it seems like you, and stopping in and out, kind of like, multitasking, but you mentioned earlier that you guarantee 4x once the money is contributed. So what actually goes into that appreciation value? What makes it go up to 4x in value?
Well, so you're contributing into an LLC, which is held as asset, and the whole idea of the bulk acquisition is that we're talking about $100 million worth of those volcanic ash fertilizer, whatever the number is, and it was acquired in such bulk that the price is steeply discounted. Imagine this: you can go to the hardware store and buy a bag of nails for so many pennies a piece, or you can go out and buy 10 tons of iron ore and melt it down and make your own nails. And that's the difference here. So as opposed to going to Home Depot or Lowe's and buying a bag of fertilizer, you're contributing to an LLC that's holding, $100 million worth of this asset. And as such, the price point is very, very, very low. And then when you donate it, because the taxing period, you're donating at fair market value. And the fair market value again is determined by the appraisal. And that's where we're getting the difference. So it's the negotiated price versus the fair market value. And that's how you get the 4x.
That makes sense.
Well, and I'm just gonna, because this might sound strange, but I have some fruit orchards and we like to garden. All right. So I'll tell you that I have an 8-year-old tree. I have a 7-year-old tree and an 8-year-old tree. My 7-year-old tree, so it's younger, I have provide soil conditioner or fertilizer, and its trunk, I don't know if you can see this, where am I holding my hands? Let's just say that its trunk is 14 inches now, and that is huge for a fruit tree. Whereas my 8-year-old tree, which is younger, my 8-year-old tree is still like this, like the size of a baseball bat, if I can get that in there. Dramatic difference, and a lot of that has to do with its ability to pull nutrients out of the soil and then obviously give fruit. That's what this volcanic ash is used for after it's refined and after it's processed and after people can buy it in a bag, so to speak. There is a dramatic increase in actual value, which is probably, and don't let me speak out of turn, but probably a little bit behind the confidence in the guaranteed 4%, 4 times multiple, etc. That people are able to provide as a deduction.
Well, the real benefit is we're calling it a leveraged tax deduction because, again, the differential of the value or the price of the volcanic ash at the bulk acquisition level versus donating at the fair market. Give an example. Say tomorrow or today, you went out and bought anything, an antique car, something you plan to donate to charity the next day. But say you went and bought it today, and you bought it at 1/10 of its fair market value. If you donated tomorrow, you wouldn't get fair market value because you only held it for a day. So you get what you paid for it when you donated. Now, if you held it for a year, you'd get the fair market value, and you get the full deduction. That's what's happening with the volcanic ash. But the volcanic ash wasn't purchased at retail price at Home Depot. All right, this is a bulk acquisition of volcanic ash. Again, you're talking about $100 million worth, so it's steeply discounted. So you're getting into steep discounted pricing. It's being donated to fair market value, and that's how you're getting your 4 times the value. Does that make sense? Okay, good.
All right. Well, I appreciate everybody's. Sorry about that. Appreciate everybody's questions and everybody's input. Thank you for communicating on the Zoom chat as well as in LinkedIn and the Facebook group. So appreciate everyone for participating today and all of your wonderful questions. Should you have more questions, feel free to reach out the office. Micah here at the 800 number, 1-800-773-1848. Micah is the one that has been helping a lot of people get set up, fill out the application, become a proud owner of a Series LLC that is participating in the bulk mineral strategy, as well as, helping them make that donation check so that they can get this deduction in the spring. So anyway, the 2022 deduction for their spring tax documents. Should you have any other questions that require a subject matter expert, reach out. We'll try to discuss those with you. If we don't have the answer, we'll reach out to those who do. And deadline for doing this, I believe, Chris Sargent, we kind of shut things off the last 2 weeks of the year. Is that right?
Yeah. So we'll say 12/15.
Or whenever the bulk mineral runs out. So
let's say sooner the better, because it's a bit of a wild west right now. We don't know. Yes. It comes in really, really, really fast after Thanksgiving. The orders come in like crazy, so we don't know how fast and how long it'll last.
All right. So if you're considering it, or if you're considering doing more, now's the time to hit that button. And of course, if you'd like some help analyzing what's the appropriate amount with you or with your clients, just give us a call. We're glad to spend some time and help you do that. Again, before the end of the year, before the end of the last 2 weeks, or before all of these minerals end up being gobbled up by other people. Micah and I actually go on vacation, and we're going to turn things off the last 3 weeks of the year. So if you try to do a last minute whatever, you'll be calling us while we're in Mexico, and hopefully we can still help you. So again, sooner the better. All right. Thanks, everybody. Chris and Chris, sure appreciate you guys on today's panel discussion.
Thank you, Jake. Appreciate it. Thank you, everyone.
Be well.
Bye-bye.
Everyone, thanks. Bye-bye.